All right, guys, I have some cool stuff to talk about. There's going to be some technical analysis here. We're going to talk about stuff related to the Dow Jones and how it's weighted. And shout out to Maya Scribe from the stream. He brought this up. I was aware of it, but I was pulling up stuff to show it on stream, and it even blew my mind a little bit further. So that's why I want to share it with you guys. And yeah, before I get to that though, got some cool. We're gonna go over some cool technical stuff. But before I do that, make sure you guys go to the description of this video, our live streaming channel. Click that, go there, and make sure you're subscribed so you don't miss us trading live. Literally, we're trading every single day, at least a couple hours a day, 6 hours. So I hope to see you guys there. I love you, and yeah, let's get into this. So, well, first thing is first, it's why the market is up so much. The real reason why, or what made it go up so much, it has to do with the weighting of the Dow Jones. Really, the claim here is that Boeing is the reason why the stock market has made this epic rally. And when you see it, it does make sense. I am biased in this. I have an uncovered call on this right now that I'm down about 300%. And it was part of this reason, for the statistical probability of it to go where it did. I doubted that very, very heavily. And putting this into perspective, it's Dow Jones is only 33 companies. And the Dow Jones is weighted not by market cap. So it's not based on how big it is, but it's a price weighted average. So literally, imagine taking all of these companies, adding their price and dividing it by 30 cents, right? Or 30 cents by 33 companies. So here's the issue though. Boeing's at 424. Realistically, it was trading around at the same time. It was in the 290s, 300s. It was still a big component. And, looking back to, Boeing has been expensive. It's been around this 390 point, but, that was right before October, and boom, it came down. And again, it had one of those rip-ups right before. But looking at Boeing and comparing it, here are the 33 Dow Jones companies. Look at the prices, 172, 107, 404. But, statistically, if you were to plot this and looking, I think, there's low numbers like $42 for Pfizer. I believe that is the lowest in the whole index. That's based on price. But the other high prices, you got UNH at 260, and I think 3M at 209, and then JP Morgan, Goldman Sachs, excuse me, and Home Depot is pretty much up there. Those are high 200s though, but anything above $300 doesn't exist here, let alone now 400. So if you were doing an analysis, on, the statistics of this, you would exclude 424 because it's statistically, outlier. Now, obviously, we're not saying, okay, it's an oddity, of course, that, Boeing, what it did, it went up a lot, and it is definitely the standout on the Dow Jones. It doesn't mean you exclude it because, that just doesn't make sense from an investing perspective. So in this case, we're considering it, but it's understanding that a big portion of the gains we've been seeing, it has came through here. Apple at 172. If we go look at Apple, even since October, when Boeing was at 3 whatever, the last time this was at 229, it's dropped a lot. If we wanted to look at Goldman Sachs, it's down substantially. And this was higher once at 260, but nothing near this $400. So putting this into perspective, it's something to watch because, I was presenting this information. Someone told me to bring it up. And again, this is what's inspiring this video. However, the real question that came out of this is, what do you do with this information? What is the point if that's the case? And the key is, it's watching for these other components to see the breadth, really, because if some of these are dropping and declining, we could start to get a real picture, or we could exclude this and try to get a better weighted average or even a market weighted average. There's many ways to look at this, but the key is I think Boeing is going to tell us a lot. And if we start to see Boeing start to give up, and really what I was explaining is I'd expect to see Boeing start to come down while other of the Dow components go up, and it'll level it out. And then that's how kind of they're going to converge, and we get to the point that now Boeing drops, these go up a little bit, then these start going down, and then they'll meet up with Boeing, and it'll kind of balance itself out. That's how it should work. That's the purpose of these weighted averages, and to have it like that. So I thought that was really interesting. Now, the next thing I want to talk about is the technicals. We are at a crucial level. This is that 200-day moving average, and there's a 200-day moving average and the 50-day moving average where we're at. And this is a technical level. Someone brought this up in the chat again, and I saw a Zero Hedge article. So I think I've given you guys my disclaimer on Zero Hedge. I love them. However, I love a lot of sites like these. I like Russia Times, and that's, state-owned media. I like Motley Fool, give or take, and I like the Drudge Report. But all of those are interesting, to say the least, right? So my disclaimer for this is I love these offshoot media sites. I like to get the info, but really, I'm really coming here for the charts, and I do like to read what they're saying, but it's even my view on, this is honestly just like a seeking alpha for crazies. Because this is just written by somebody. They put in their take on it, and that's it. But I was reading this, and it did bring up some facts. And firstly, here is the Q1 EPS. And now, if any of you are familiar, we're wrapping up earnings. We're seeing where everything has gone in, and then the profit margins and growth. This is 2 quarters of decline. You'll notice here, this is since 15. You do not see more than 1 quarter of decline. So now, this is just like I pointed this out in real estate before, which was so important. When you started to see certain real estate metrics decline, real estate and sales fell into a recession. But a recession, essentially, if you don't want to look at it like the Great Recession and crazy, by definition, it's 3 quarters of declining profits. And that's what we see here with the net profit margins and what's going on with, the net profits. If you saw my video on the filings, net profit is very, very important. So this is very, very unique. But now, reading it, they give a really good case in point of how, and I'll go over the article, but pretty much it's saying how this technical level, where we're at with the 50-day moving average, it's crucial because, I thought it was funny because everyone's like, oh, it's going to retrace to the 200-day moving average, but now they're getting another indicator right when we hit there. It's like, oh, the 50-day moving average now, and everyone's saying, well, the signal, and here's the key of why it's so important, because right now, people are confused. People are really confused, even with the market. And again, I said this in my video. You guys saw my stock crash videos. I said you guys are going to call me an idiot at one point. It's just confusion in the market. It's up, and people are now saying this is either pointing to a technical breakout or a technical decline, and that's what those other charts here are going to show. But let me read you guys the article. And again, usually I wouldn't read the article, but I believe this one was really, really good. So let's see this. But while these factors have pushed the S&P above critical 2,800 resistance level, there's very little conviction in the move. In fact, as BTIG's Julian Emanuel told Bloomberg today, at a slight level above 2,813, which is basically around the tops of highs in October, November, and December, people are actually hoping the market fails because so many are lagging behind the strong year-to-date rally. Adding that, if anything, the fear in professional investors' mind is now a further upside. And since 2813 is a triple top, this would make it a quadruple top. So with confusion rampant, traders have resorted to technicals where unfortunately even more confusion emerges when one looks at the key 50-day moving average. Recall the Prism FP's Mark Orsley observed last week, the level of S&P versus his 50-day moving average is severely extended. In fact, over the last 20 years, it has only been this extended twice, and that is this graph we got right here. And that is something important to notice. And I said we are going to see a level of rally we have not seen in history, and that is because we saw a decline not seen in history. Equal and opposite reactions. I'm a firm believer. This is notable because on both of those occasions, the S&P suffered a significant 10% correction just 1 month later. And yet, this is even if you go watch a video I just posted today on Russia, the sanctions. If we're hitting these key technical levels, this is where I'm kind of pointing at. Russia, I was not expecting that news to blow up overnight. I'm expecting that to have an effect here in a decent amount of time. We may not be out of the clear here with March. However, this is important to note. And again, before I finish, I want you technical guys to give me your opinion on this. I would love to hear different views on this, but this is data I could rock with. It's kind of like the up Monday or down Monday, down Friday, but this is still very, very, I like the technicals that are pretty much pointing to both ways. I don't like it when it says up or down, but when it's kind of a pivotal one, these are great. So, and yet a diametrically opposite observation about market performance can be made when looking at the performance of the S&P's constituent members or market breadth. According to Bloomberg, the S&P's post-Christmas advance pushed more than 92% of the SPX members above their 50-day average. That's only happened 9 times since the beginning of the millennium. But what is more bizarre is that unlike the massively overbought signal noted above, this one actually has a happy ending. And as Bloomberg calculates, on average, every time 90% of the indexes were trading above their 50-day moving average, the index has gained 10% over the following 100 days. For accuracy, on 7 of those occurrences, the index was higher 100 trading days later. So what happens to the market next? Pretty much, that's the key here, is that we are hitting a technical level, and it's a technical level confusing for a lot of people. So I want to see what happens with this and what's going to go on. But if the fear starts creeping up here, I'm expecting a little pop above, but then again, the trade stuff, the market didn't buy today. They sold the news. There's more reports coming out that people are saying literally there's no deal. The tariffs are still there that brought us down in October. We just aren't adding more. So nothing has really changed. And now we're hitting this level. If it tops out at the same level, this could panic a lot of investors. And again, there has been some liquidations. We could see this creep in, I think, mixed with some political events, some Russia, Venezuela, even, some more cut earnings. And again, Kraft Heinz using the write-off of their goodwill, that is a scary, scary factor too. So I'm going to keep my eyes out on that. You guys should too. Hopefully this helps in some way. I love you guys. Let me get your feedback. I'd love to hear your guys' thoughts on the technical stuff. I'd love to hear it on Boeing. You guys got to see me get crushed on that play. That was fun. And what do you guys think overall with the market? Where do you think, now that we're about to come into the end of the first quarter here in March, what do you think so far? Do you think nothing has changed from here? Do you think it's investor confidence is back and they're pumping it? QT, QE, do you think all bears are idiots? Do you think all bulls are idiots? I would love to hear it. Use this comment, as information. Please be nice, respectful of each other, and this is sourcing information. So I love you guys. I'll see you on stream tomorrow morning. Peace.